Good evening, everyone. Welcome back to our LVC on revision sessions for our paper on indirect tax. Yes, very good evening, Smriti. Good evening, Geeta. Yes, good evening, one and all who all are present. So, in the previous class, we discussed with a technical topic. First was import-export under GST. And then we started with a very interesting, though equally technical, because it has lot many technical pointers, that is relating to refunds under GST. I would like to just summarize fast so that you all come back on the same page, and then we can continue with the remaining part of this. So broadly, we were discussing about refunds under GST. So there are different scenarios under which refunds are eligible under GST law. Now, those scenarios are listed at the start. In what cases, as a taxpayer, you can apply for refunds. So these are the scenarios. As you can see, firstly, wherever you are making export or you are supplying to SEZ unit or developer with payment of GST. Same, whenever there is export or you are supplying to SEZ unit or developer but without payment of GST. Now GST is obviously IGST because these are interstate supplies. Then in case of deemed export, then refund of excess amount kept in your cash ledger. So it is your own money, you can always ask for refund. Then refund on account of tax paid where supply is not provided. So you paid tax on advance, but later on supply was cancelled. Refund of tax which is wrongly collected. So this will happen generally in case of TDS. Next, where a tourist is living in India and he has purchased something which he's now taking along with him outside India, he can claim refund. Then refund which becomes applicable on the basis of any judgment, decree of any court tribunal. Next, where there was provisional assessment in which you paid tax at a higher rate or higher value. Later on finalization of the assessment, it came out that the tax rate is lower. So you can claim the difference as a refund. Refund given to United Nations bodies or embassies. Then refund where casual taxable person or NRTP at the time of registration has to pay tax in advance. But after the conclusion of their event, their exhibition, if the final liability is lower, they can claim refund. And then a newly added provision whereby we were discussing in this part that you have already applied for export refund when the export happened. Later on, there was some upward revision in the value or price of export, which we adjust through debit note. Now, this logically should be allowed as a refund, but there was no proper mechanism. So by this amendment, this mechanism was added. Then after understanding what are the different types of refund, then comes the procedural part. So main procedural part is you have to make application. This application is not required only in one case where you are exporting goods with payment of IGST option. That is the only case where application is not required, because once the exporter files his GSTR 1 and then 3B for that particular month, the data from the GST portal automatically matches with the customs portal, which is the ICAI, and then on the basis of this matching, the refund is automatically credited to your bank account. Otherwise, in all other cases, you have to apply for the refund. So these were the detailed points that we discussed. Then came another point, the time within which this refund application has to be filed. So basically the time limit is 2 years, 2 years from relevant date. And then the relevant date, which is, if you remember, I had mentioned is a very important part in the refund chapter. The relevant date is nothing but the date when your eligibility for refund triggers. Now, when this refund eligibility will trigger, whenever the refund causing event happens, like if we are talking about export refund, when the ship or the aircraft leaves India. If we are talking about deemed export, so when the supplier files his returns and pays the tax, and then you can go for refund. When it is supplies to SEZ, again, after filing of refund, where you disclose these supplies. Similarly, in case of export of services, in that particular case, once you have paid the tax on this export of services, you can claim or apply for refund from that date within 2 years. Now, in this case, it will be later of the two. First, either if the supply has happened first or if the payment has been received first. The possibility is if the payment is received first, then when the supply happens and you raise invoice, that will be the triggering point. If supply has happened first and payment happens afterwards, then the payment date would be the triggering point. So out of which, both whichever is later. Next, in case refund becomes eligible on the basis of any judgment, the triggering point is the date of communication of this judgment, decree or order. In case of claiming refund of unutilized ITC on account of inverted duty structure, then it would be monthly whenever that particular inverted duty sales or inverted duty supply happens. In case of provisional assessment, obviously the refund would trigger when it is finalized that yes, the rate or the value was lower. So that would be the date of final assessment. In case where the buyer wants to apply, it would be the date of receipt of goods or services. And in any other case, the date on which tax is paid. Another important point was bunching of the refund claims across financial year. So now the law says if you are eligible for refund every month, because every month the refund eligibility or refund triggering event is happening. So either you can file your application month-wise, that is for each tax period, or you can club the tax periods and file a single application. Now in that case, a query or an issue in the initial years was that what if I want to club 6 months, out of which 3 months are Jan to March, which is in the first financial year, and the other 3 are April, May, June, which is in the next financial year. Can I club this? So earlier, the portal was not allowing it. Later on, this facility has also been made available. So now you can even bunch your tax periods, which can be spread in different financial years. Next part is, obviously, if you want a refund, you should justify that yes, one, a refund is eligible. Two, you are eligible for it. These are two different things which you have to justify, which you have to make out on the basis of the documentary evidences. So one, a refund is eligible. That how you'll make out. So for that you know the reasons for refunds. So you'll have to prove that one of those reasons has actually happened. That you have to prove out through documents. Like in case of export, you have to give export documents. In case of inverted structure, you have to prove that your output rate and the input rate are different. So these are the documentary evidence to prove the eligibility of refund. The second is you are eligible for refund. Now, what does this mean? This is from where we are going to start our today's deliberation. That is the principle of unjust enrichment. So in any indirect tax scenario, generally what happens, supplier collects the tax from the buyer and deposits with the government. Now, tomorrow, if refund is eligible because of first condition satisfaction, that yes, your case is eligible for refund. But then the second case is you'll have to prove that you have borne the tax burden in the first place. Only then refund will be eligible to you. Otherwise, it will be eligible to the person who has borne the burden. So this is the second point which you have to prove. For all this, necessary documents have to be submitted. And if you remember, there is a list which is given further as to for what purpose, what documents have to be submitted. Further, where your refund amount is exceeding 2 lakhs, you require a certificate either from a practicing chartered accountant or a practicing cost accountant. Then the next thing that we dealt with was the procedure. So first, you made application. The second step is acknowledgement of this refund claim by the department. Now, it may happen that they may not accept it, rather they reject it. So that is how they will issue a deficiency memo for rejecting it. Then another possibility is that before they process your refund application, if you feel that some wrong application has been made by you, you have the option of withdrawing, provided they have not processed and passed your refund claim. Next, if everything is found appropriate, then the law says the refund amount, at least 90% of it, should be given to you within 7 days of your filing of the application, and balance 10% will be after doing all the detailed checks. Then Some condition safeguard, this we have already discussed. Then finally comes the order of refund. Just 1 second. I will stop. Just a minute. Once your refund is accepted and it is processed, then will come the final stage, which is the refund order. Now, how the refund will be given? The law says it depends upon the manner in which you originally paid the tax. If you have paid the tax using cash ledger, the refund will be granted by crediting that amount in your cash ledger. If you had originally paid tax using the credit ledger, the refund would be granted to you by crediting that amount to your credit ledger. Then comes this point, from which we are going to start our discussion today in detail. This is what is the principle of unjust enrichment. Now, what is this principle? Now, two things, as I said, you have to do. One, refund is eligible because it is fitting in one of the refund scenarios. And second, you are eligible. Now, the first thing is proved that yes, in this scenario, refund is eligible because it is fitting in one of the refund scenarios. But the second issue is you are unable to prove that you are eligible. Why? Because the refund, the tax portion or the tax burden is already shifted by you and you have recovered the tax from the recipient or buyer. In this case, the law says you cannot get the refund, otherwise it will be unfair. It will be undue advantage to you, that is unjust enrichment. In this particular case, interestingly, once the first stage is proved that yes, refund is eligible, if later on it is proved that you are not eligible because it will be unjust enrichment to you, similarly, on same lines, the refund amount can now not be even kept by the government because you have already paid the tax to the government. And if the refund is maintainable, even the government cannot keep that amount because otherwise it will be unjust enrichment on the part of the government. So the provision right from the previous excise era has been so crafted that the law says that you will be given refund if it is not liable to be transferred to the consumer welfare fund. So the law language is so drafted that you will have to justify that you are eligible. If you are not able to justify that you are eligible, then the lawmakers have all the rights to transfer this to a special and an independent account, which is called as the consumer welfare fund, because they cannot even keep this with the government. Otherwise, it would be unjust enrichment in that sense. Then one more procedural point is before they reject the refund, if they have any questions or doubts, they may even issue a show cause asking you to justify. If you justify properly, your refund claim will be passed. Otherwise, they can reject it. Now, another point is withholding of refund claim. Wherever any proceedings are pending or there is any amount recoverable from you, in any of these cases, the commissioner may order that the refund, which is otherwise eligible to you, should be withheld until this proceedings are concluded or it is concluded that yes, no amount is due from you. If any amount is due, rather they have the powers even to deduct that amount from the refundee. But until that amount is finalized, they can withhold your refund. Now, in case where you have applied for refund of accumulated ITC, which will happen in case of inverted duty structure or export without payment of tax, or where in case of export, the recipient is going for refund. In all these cases, you are applying for refund of the accumulated ITC. In such cases, when you apply for the refund, when you submit the application on the portal, the refund amount gets debited from your credit ledger. Reason being, you are demanding that much refund. So they will reduce that from your ITC ledger. Now, let us say tomorrow, after running of all this procedure, it is identified that no, refund is not maintainable, or you applied for 100 and they believe only 60 is maintainable, so 40 is rejected. So either where full refund is rejected or 40 is rejected. Originally, when you had filed the refund application, the amount was debited to your ITC ledger. So now, if it is rejected, the point says it will be credited back to your ITC ledger. Now, till this point, we had discussed everything. So I summarize everything in short for everybody's benefit and also to bring you all on the same page. Now, from here, we continue the details of this chapter. This is a very interesting and an important chapter for your exam. So I'll request everyone to tentative. If anybody has any particular questions or doubts until this point, you may please feel free to put it across to me. Yes, anybody has any questions? Students, anybody, any doubts, any questions? No? Should I proceed? Now, this is another part which is very relevant, very important for your exams. That is the theory of unjust enrichment. It is also called as doctrine of unjust enrichment. It is also called as principle of unjust enrichment. So basically, what is unjust enrichment? Unjust means unfair. Enrichment means being benefited. So putting it simply, when you are benefited, now in case of refund, this term is used because if refund is given to you, you will be benefited. But this benefit is unfair. It was not applicable. The refund was not due to you. Why? Because you never bore the tax burden. So in such cases, if the refund is still given to you, it will become an unfair benefit to you. That is what is the concept and theory of unjust enrichment. So what it says means retention of benefit by a person that is unjust or inequitable. Unjust enrichment occurs when a person retains money or benefit which in justice, equity, and good conscience belong to someone else. So generally in case of refund, this concept applies when tax burden was shifted in the first place. So your recipient, your buyer paid the tax, but you are applying for refund. So if refund is given to you, it will be an unfair advantage to you. So the theory of unjust enrichment under GST postulate that only the person who has not passed on the incidence, or in other words, who has borne the incidence, should be the person getting the refund. That is the simple final outcome of this principle of unjust enrichment. Right? Okay. Now, if the claim of refund passes the test of unjust enrichment, then only it is paid to the applicant. So this was my second point. So first you prove the eligibility that refund is maintainable. Second, you prove it is maintainable to you. So when this will be proved, when you pass the test of unjust enrichment, that is, you prove that you bore the duty burden. The GST law makes this test inapplicable in case of refund of unutilized ITC, refund on account of export, refund of payment of wrong tax, refund of tax paid on supply which is not provided, or where refund voucher is issued, or if the applicant shows that he has not passed on the incidence of tax to any other person. These cases have been given in detail in the next part. Fine. Next, as discussed earlier, for crossing the bar of unjust enrichment, if the refund is up to 2 lakhs, a self-declaration is sufficient. If it is more, then you have to take certificate. Now, this is the point which you should again learn, remember for your exams. You'll get this question. Cases where theory of unjust enrichment is not applicable, you can get the question like this. What are the cases for where theory of unjust enrichment is not applicable? Or the question could be like this. Now, what I'm reading this sentence, then I'll give you the question. So section 54, it stipulates that refundable amount shall, instead of being credited to the consumer welfare fund, will be paid to the applicant. So the question would be, in what cases the refundable amount shall, instead of being credited to the consumer welfare fund, be paid to the applicant? So this will be the particular question. See, when it will be paid to you and not transferred to the consumer welfare fund. In other words, where theory of unjust enrichment will not apply. In other words, where you will get the refund. Now, what are these cases? First, refund where you have exported your goods or services under the first option, that is with payment of tax option. Now, why refund will be maintainable here? Why unjust enrichment will not affect this? For the simple reason, when you are exporting goods or service, practically you never recover the tax from the foreign buyer for two reasons. One, a foreign buyer will never pay you your domestic taxes. Two, if you add the tax, the foreign buyer may not even buy from you because it will add to his cost of purchase, and your goods, your services may no more be competitive in the foreign market. So these are the two reasons why any exporter will never add the amount of tax in his outward export supplies. Next, second case where this theory does not apply and refund is granted to you, refund of unutilized ITC in case of zero rated supplies made without payment of tax or accumulated ITC on account of inverted duty structure. So where you want to claim refund of your ITC. So ITC is always the amount which you have already paid to your supplier. So when you purchase anything, you pay the tax to the supplier, and that is what comes and becomes your ITC. Now, if this ITC remains unutilized, when it will be unutilized? When you go for the second option of export, that is export without payment of GST, or where your business is in the inverted duty structure, whereby the outward tax rate is lower and inward supplies tax rate is higher. In such cases, the ITC gets accumulated. Now, whenever you are filing refund application for accumulated ITC, again, there should be no challenge for the unjust enrichment for the simple reason you have already borne that particular tax. Then comes the third scenario, refund of tax paid on supply, which is not provided. Now, again, the chances are here that since you had not supplied the goods or service, means it was advance, mainly this will happen in case of services because you pay tax only on advance for services, not for goods. In such a case, there is a possibility that you may not have recovered the tax because the supply is yet to be made, and most important, you should have issued a refund voucher refunding back the tax if you have taken. So that is what is the point. Next, refund of tax, which is in persons of section 77. What is 77? Tax is paid on transaction by wrongly classifying it as intrastate, though it was interstate, or vice versa, classifying it as interstate, though it was intrastate. So in such cases, again, the refund will be allowed to. So basically, in all these cases, what they're trying to say is, whenever the duty burden is not passed on, then you will be eligible for the refund, and this particular principle of doctrine of unjust enrichment will not apply. Next, disbursement of refund of state tax. So once you apply for refund, it applies to all taxes, whether central or state. So whatever is the refund applicable for central taxes is also equally applied to state taxes. Next, refundable amount to be created to consumer welfare fund in all other cases. So wherever the refund is maintainable, but you cannot prove it is maintainable to you, the law says we will transfer this amount to consumer welfare fund. Now comes the third aspect. If you remember, when we started this topic in the previous class, I said there are three aspects to be understood in refund. One, where refund is maintainable. Two, the procedural part. And third, the calculation part. So now we are coming on the third part, which is the calculation part, which again you have to focus on because this can also be a part of your exam questions. Today, we will not take practicals on this. Today, we'll understand the conceptual part. We will, if required, if the time permits, we'll go to the next chapter also. And then in the next class, we will take up all the past exam practical questions together. So how we did in our first part, where we first covered a few chapters and took all questions in one session, the same thing we do again, so that you all are also having that additional chance of revision, so that when we take that practical sums, again, it will be a revision-like thing for you. And till that, you also get time to revise and come back for that practical solving class. Okay. So now we come to the third aspect of refund chapter. That is the computation aspect. Now, when this computation aspect is required, whenever you are claiming refund of the ITC. Now, please understand this, students. Let us understand this conceptually so that we understand the working parts also, that is the calculation part also. First is refund where I am paying the tax on my outward supply and I am claiming the refund of the same output tax. That is the first type of refund, where no calculation is required. Why? Because let us say I export my goods or services with payment of tax, or I supply it to SEZ with payment of tax, or I am a supplier of deemed exporter where I've charged GST on my deemed export. In all these cases, let us say I've charged 100 rupees as the GST, whatever it is, IGST, or in case of deemed export, it may be even C plus S. Now, in this particular case, when I am paying this tax first, 100 rupees, and tomorrow I am applying for a refund, no calculation is required because I have to simply prove that this 100 rupees tax which I paid on my outward supply is what is eligible for refund. Full stop. No calculations are required for that. This is what is covered in Rule 90, where you are taking refund for tax which is paid on your outward supplies in case of exports. However, when you want to claim refund of tax which you had paid on your inward supplies, now what you have paid on your inward supply is today lying with you under the category of input tax credit. So in other words, you want to claim the refund of your accumulated input tax credit. Now when this will happen? First, this will happen in case where your export or supply to SEZ was under the second option, that is where no tax was charged on outward supply. Outward supply was without levying any IGST. Second, this will happen where the cases of deemed export, but the refund claim is by the recipient, not by the supplier. Third, this will happen in case where the UIN holders, that is the embassies or the consulates, these people apply for refund. Fourth, whenever you are under the inverted duty structure. So in all these cases, you are claiming refund of the ITC. Now, in such refund application claims, there would be some calculation required. Let us again first understand why these calculations are required in this particular case scenario, and then what type of calculations are required. So let us try to answer both these questions. Why and what calculation? So let us take a scenario. I am a businessman, a manufacturer who is let us say manufacturing these water bottles, right? This Kinley bottle or this Bisleri bottle, and I want to sell these. Now, when I'm manufacturing these water bottles, I'm making some supply which is within India, which we can call as domestic supplies, either with C plus S or with I. Second, I'm also exporting these water bottles outside India to different countries. In this particular case, when I am exporting it outside India, I am exporting it under the second option, which is without payment of IGST. Now, if I'm exporting it under the option of without payment of IGST, then I will be demanding the refund of my accumulated ITC. Correct? Now comes the main point. Here, when I'm running my business, I have two types of outward supplies. One is not eligible for refund, one is eligible for refund. The domestic supplies which I am making are not eligible for refund, but the export supplies which I am making under the second option of without payment of GST are eligible for refund. Now, in this particular case, this another supply is eligible for refund, but the refund is of what? The refund is of the accumulated ITC. Interestingly, whatever ITC I am getting on my inputs or input services, that ITC will be utilized for both supplies. It will be utilized even for my export supplies, which are eligible for refund. It is also being utilized for my domestic supplies, which are not eligible for it. So, in such a case, if I want to demand refund of this ITC, logically, this refund cannot be of the total ITC balance which I'm having. So my first two questions I'm trying to answer. One, why you need a calculation? And then what is the calculation? So first we understand why you need a calculation here. Why not in the first case? The first case was where I'm trying to take refund of my tax paid on outward supply. Why no calculation is required? Because whatever tax paid, let us say in my example 100 rupees, I want refund of that 100. That's it. no calculation required. But when it is about ITC, so there is a possibility that this ITC, or I'll now use the word the inputs and input services which are coming to my business, are being utilized for both types of supplies. One which is eligible for refund, one which is not eligible for refund. In such a scenario, whatever ITC I'm having, the entire ITC is not eligible for refund because this entire ITC balance is utilized for both. So logically, I should get only the refund of the proportionate ITC. What proportion ITC? The ITC which is attributable to my export supplies or that supply which is eligible for refund. And corollary to this, I should not get refund of that proportionate ITC which is utilized for this supply, which is a domestic supply or which is a non-refund eligible supply. So I have tried to answer the first question that why only in case of ITC refunds I need a working, because the ITC may be utilized for both types of supplies. One eligible, one not eligible. Now, interestingly, within not eligible, there could be multiple supplies, domestic supplies, exempt supplies, no supplies, so many things. So I need to work out the proportionate amount of ITC attributable to my eligible export supplies or whatever are eligible for it. Perfect. So I tried to answer the first question, why only I require a calculation in this type of refund application and not in the other one. Then comes the next question, what should be this calculation? To put it very simply, simple maths, if my two supplies are there, outward supplies, let us say domestic is of 400 and export is of 600. Then my total outward supply is of 1000. I want to claim refund of my accumulated ITC. But which ITC? Which is attributable only to my export supplies, not to my domestic supplies. Then logically, what should be the working? The working should be simple maths. I want to find out the ITC which is applicable to this. This is my export supply which is eligible for it. So what I will do, I will add up my total supply which is coming to 1000. So my denominator is 1000. Numerator will be this supply which is 600. So I get a ratio that out of total supplies, 600 is eligible. So I get this ratio numerator, denominator. Now I take this ratio and I multiply it by the eligible ITC. Whatever is the eligible ITC multiplied by 600 divided by 1000. Mathematically, bare maths. Now we are going to go to details, but I'm trying to give you a simple outline. So what would be the calculation? The calculation would be numerator eligible supplies, denominator total supplies, and this ratio multiplied by eligible ITC. Perfect, students. All other students, are you getting this clear to all? Should I proceed? So now, so a list is given as to cases where refund of ITC portion is available. First, where you are exporting or supplying to SEZ without payment of tax. Two, where you have inverted duty structure. Next, supply of specified goods service where refund of unutilized ITC on account of inverted duty structure is not allowed. So there are some exceptions. Fine. Now, how to go ahead with this? Same with your procedural points. You have to make an application. Jyoti Beda, I think by mistake you have made some marking. Can you delete it? Because it will continue on all my pages. Or 1 second, I'll stop and reshare. Okay. Fine. So the other procedural points will be same like how we discussed. You have to make an application in RFD 01. Same time limit of 2 years is applicable. Now, doctrine of unjust enrichment will not be applicable. This is what we studied above also. Why? Because this is the amount which you have already paid. In fact, you are the one who has borne this tax. Why? Because we are claiming the refund for my accumulated ITC. And ITC will come only where while purchasing I have paid tax to the supplier. So here there is no need to prove the unjust enrichment part. It is presumed that there is no unjust enrichment. Now comes the refund formula. This is, you can say, the first starting basic formula, but the logic is same what I just explained. So in numerator, you will find turnover of zero rated supply of goods plus if there is service turnover also, turnover of zero rated supply of services. Now we are talking about the refund of unutilized ITC, which arises because of either export of good service or because of supply of good service to SEZ unit or developer. These are the two cases which are covered under zero rated supply. So first we are dealing with the refund application in case of zero rated supply. Now when we are dealing with refund application in case of zero rated supply, as I already explained you the formula is that in numerator, you will take the turnover of the eligible amount of supply. In my case, it is the zero rated supply. And in the denominator, you will take the total turnover. Now, though they have used some other word, but logic is same. Why they have used other word, that you will come to. So numerator, total turnover. Numerator is eligible turnover. In my case, it is the turnover of zero rated supply. And denominator, it is the total turnover. And then multiplied by the net ITC. So this will give you the proportionate ITC applicable or related to your eligible refund outward supply, which in this example is zero rated supplies. Now, what are the meaning of this? First, refund amount is what means the maximum refund that is allowed. So obviously that is a refund amount. Now, numerator, denominator, and these terms. So what are the definition of net ITC? That is this amount which you are going to multiply. It means ITC availed on inputs. Now there is some clarification on the term inputs that we'll see, and input services during the relevant period. Now what is interesting and important to be noted here is we get ITC on three things: inputs, input service, capital goods. However, while computing this refund by the formula, the net ITC that you are considering here will only cover ITC on inputs and on input services, not on capital goods. So whatever ITC you have claimed on capital goods, though the capital goods may be used even for making the outward supply of exports, this refund formula does not consider that ITC, so it will not be refundable. Fine. Then we come to the meaning of the numerator. Now, interestingly, there is a very interesting, I will not say twist, but there is an interesting condition over here as to what is the meaning of turnover of zero rated supply of goods and service. We already know what is zero rated supply of goods or service. Then what was the need of definition? The need is what it says. Turnover of zero rated supply of goods means value of zero rated supply of goods made during the relevant period without payment of tax. So anyways, this refund is eligible or available when you are making outward supply, that is export, without charging GST. Then only we come to the formula. So in the numerator, you'll only take the value of that export or zero rated supply, which is without payment of tax. But interesting part is the second, or value which is up to 1.5 times of what? Of the value of same goods when supplied domestically by the same or similarly placed supplier as declared by the supplier. Out of both these values, whichever is less. So effectively what they're trying to say is that two values you have to compare and take whichever is lower. One is the actual value of supply, which is the export. So in short, what you are showing on your export invoice. Two, If same goods are being sold within India, that is domestically, take that value and multiply that value by 1.5 times. So your domestic value multiplied by 1.5. This is the second value. Now, what is the logic? Or somebody will ask you, sir, why such type of figure is given? Why lower of these two is taken? So understand the logic of this. Firstly, this point was not there originally in the law. It was later on added. Why? The reason is government found that some unscrupulous exporters, in order to avail, uh, I don't know whether a word is correct, but in order to avail wrong refund, or I will say a refund which is not legally available to them. Why? Because though they have made export, but the export is of only rupees 100, but they have inflated the value of export to make it rupees 1000. So they are showing on their shipping bill the value of export as 1000. So they are preparing an invoice of 1000, though actually the genuine value of the goods may be only 100. That is where, when they realize this, they brought in this condition that, okay, we will take 1.5 times of the value when the same goods are sold within India. So what they are trying to indirectly bring out is that in case of export, even if you are charging more price, which many times you do, because foreigners are ready to pay higher price of certain things, because in their country the same thing is at high price, so why we will sell for lower price? So maximum what a businessman would be doing or could be doing is maximum charging 1.5 times at which he or any similarly placed supplier is selling the goods in India. So this is what is the presumption of law. So that is why the law has brought out this condition of 1.5 times. So you have to take your export value, which you are showing on your export documents, or you have to find out this value, compare the two, and take whichever is less. Practically everyone is taking this value only, because they all are claiming that this 1.5 times value is much, much higher than our actual export value. So people are practically taking this one. Though the law says you have to take whichever is less. Then comes the second value, that is what will be the value of turnover for supply or zero rated supply of services. It is the value of zero rated supply of services made without payment of tax under bond or LUT. How calculated? First, it says zero rated supply of service is the aggregate of the payment received during the relevant period for zero rated supply of service and zero rated supply of service where supply has been completed, for which payment has been received in advance in any period prior to the relevant period, reduced by the advances received for zero rated supply of service for which supply has not been completed. So in short, they are taking the same point, which if you remember we studied about, that in case of export of service, on what basis the refund will be allowed? One, either you should have made the supply or you should have received the payment, whichever is later. They are bringing out the same thing in the formula, that what we will take as the value of zero rated supply of service. So for that they are saying we will take the value as one, the value of the supply which has actually happened, that is where the export is already done, or where the payment is received, whichever is later. So that is how they are bringing out this same condition in this particular formula. There is some question Jyoti is asking, sir, if domestically they are not selling these goods or defective goods selling at lower price, then also we need to consider the same. That is why, Jyoti, that is why they have said that when you are taking this 1.5 times here, either it will be the goods supplied by you, that is the same supplier, or by any other supplier who is similarly placed. Similarly means he is acting same like you. So if you're a manufacturer, he is also a manufacturer. So same type of supplier. So either you are supplying it domestically, then what price you are taking, take 1.5 times of that of same goods. And if you're not supplying, then if similarly placed supplier is supplying, you take that supply as well. Fine, better? Then comes the third definition, which is of the denominator. What is covered in the denominator? They have used the term adjusted total turnover. So simply it is your total supplies, which will include exports and zero rated, and which will also include domestic. So what it says, adjusted total turnover means the sum total of the value of one, turnover in a state or a union territory as defined under this, excluding turnover of services. And two, turnover of zero rated supply of services determined in terms of clause D above, and non-zero rated supply of services. So in short, what is total turnover? Total turnover means total turnover of goods plus services. In A part, they have covered only goods, that is excluding service. In B part, they have covered services. Excluding the value of exempt supplies other than zero rated supplies during the relevant period. So this is what is the definition of adjusted total turnover. And then what is relevant period? Relevant period means the period for which you are making this application. Now here, they have interestingly brought in one more condition. What is this condition? Now generally this condition, generally I'm saying, is applicable for goods. What is that condition? It says that for the purpose of this sub rule, that is for the purpose of this formula, the value of goods exported out of India shall be what? One, the FOB value declared in the shipping bill, or the value declared in your tax invoice or bill of supply, whichever is less. So for goods, already you had that 1.5 times condition where you are taking out of the value whichever is lower. Now, another condition for goods is that whenever you want to take the export value of goods, it will be one, the FOB price. FOB price is the free on board price, which is when you file the shipping bill, which is the export document. On that, you show a value which is called as FOB. So take that value, or the value which you are showing on your GST invoice, whichever is lower. So see, so many conditions are inbuilt in the law. The reason, see, export refunds or any refund is such a thing where you are taking the money back from government. So when the government has to give you back the money, they want to ensure that nothing you are getting is unfair or unjust. So that is why so many conditions, so many calculations are put in. Next, some clarifications regarding what manner of calculating the denominator, which is the adjusted total turnover. First, value of goods exported out of India. The value of goods exported out of India to be included in the total turnover will be same as determined as per the above explanation. So where we just saw in the above explanation, what will be the value of exported goods? It will be the FOB value on the shipping bill or your value on the invoice, whichever is lower. So same thing in numerator, same thing in denominator. Next, restriction of turnover of zero rated supply of goods up to 1.5 times of domestic price. So what they are saying, as seen above, adjusted turnover includes turnover in state, union territory, etc. Turnover in state, union territory includes turnover or value of exported goods also. Now, the definition of the term turnover of zero rated supply of goods used in the above formula is also restricted to the same 1.5 times. In short, if you have to simply remember this point, it is trying to say whatever conditions and restrictions we have put to compute the numerator value, the same restrictions conditions we have to apply even to the denominator value. So in the numerator, you are taking value of exports only. In the denominator, you are taking total turnover. For both, the same restriction condition shall apply. So this is what is shown by way of an example. We'll be doing practical separately. So at that time, this point will be covered. Now, there arose an issue for consideration. Now, what is this issue? Whether an applicant can seek refund of unutilized ITC on account of inverted duty structure under this section in a case where the inversion is due to change in the GST rate on the same goods. Now, this is an interesting point. Now, you are allowed refund whenever there is an inverted duty structure. What is this inverted duty structure? Your output rate is 12%, your input rate is 18%. So you can always take the refund because 6% will be accumulated because of this inverted duty structure. Now, a question that came to the council was that let us say today the rate which is applicable to your supply is 18%. So you purchase the goods at 18% because you are a trader, you are purchasing the goods and selling the same goods. Now, till now, there was no question of inverted duty structure. Why? Because you are purchasing by paying 18% and your sale was also by charging 18%. However, after you made these purchases, let us say in the council meeting, which will happen very soon, the 56th council meeting, the council takes a decision that no, we want to reduce the rate from 18 to 12. This is in fact one of the consideration where now very soon, maybe not in this council meeting, but in next year or two, you'll find that the rates are being rationalized because they want to reduce the number of slabs. So when that will happen, so let us say I made purchases at 18%, which is now present price. But because of this rate rationalization, the goods are now put in 12% slab. Interestingly, let us assume immediately after the council meeting, the notification is also passed. Now I have a scenario where when I purchase these goods, I had paid 18%. But now when I'm going to sell these goods, the rate has become 12% for the same goods. The question was that whether this will be considered as inverted duty structure and whether I should be allowed refund. Correct? So for this, what has been clarified? So they clarified that in such a case, as the rate of output tax is less than the rate of tax on input at the same point of time, due to supply of goods by supplier under some concession notification, the credit accumulated is admissible for refund. So what they are trying to say is when the accumulation because of inverted duty structure, that is output rate is lesser and input rate is higher, if this happen at the same point of time, then only it is covered. If it is happening at different point of time, it is not covered. It means what has been clarified in this particular case, that in this particular scenario which we are discussing, inverted duty structure refund is not applicable. Why? Because you purchase today and you are going to sell it, let us say, after 3 months. So the purchase sale is at different point of time. And if between this the rate has been reduced, it will not be considered as inverted duty structure. When anything will be considered as inverted duty structure, when this inverted rate structure of output rate is lower, input rate is higher, should be at the same point of time. So today only, if I see my purchase rate, it is 18%. And today only, if I make a sale, the rate is 12% or 5%. Now, generally, this will happen only in case one, where you are a manufacturer, so input is a different item, output is a different item. Or two, you are a trader, but you are trading using the merchant export option. If you remember, we had discussed this in the previous chapter. What is merchant trade? Where you are supplying to an exporter. So you are the manufacturer, you are yourself not exporting the goods directly, but you are selling it, which is trading, to an exporter who is called as merchant exporter, who will be then exporting these goods. So over there, one concession, one option was given that you may not charge the full rate of your goods to the exporter, you may charge a concession rate of 0.1%. Now in this particular case, I purchase the goods at 18%, which is the normal rate. And today itself, when I'm selling these goods are sold under the concessional rate option of 1%. So when I do this, in that particular case, it will qualify as inverted duty structure, and I am eligible to claim this refund. Jyoti, but you said deemed export. Sorry, this will not qualify as deemed export. But deemed export is altogether different. There are 4 different supplies covered under deemed export. This is not a deemed export, beta. This is a special concession given when I am selling something to the exporter who is going to directly export my goods without any changes from his or her end. This is not a deemed export, beta. Fine? Great. Now, in the above formula, where the word input was used because ITC is paid on your input, we saw the same star. We said that there is some clarification of this input. Now, what is this clarification? On certain occasions, ITC on stores and spares, packing material, material purchase, or machinery repairs, printing stationery is not considered as part of net ITC on the ground that these are not directly required for manufacturing and they will not qualify as input. This is what is the stand taken by the department. Now, what has been clarified? It has been clarified that ITC of GST paid on inputs shall be available to the registered person so long as the person uses or intends to use the input for the purpose of their business. There is no specific restriction on availment of such ITC anywhere in the law, and hence the GST paid on inward supplies of stores or spare parts, packing material, etc., shall be available as ITC if you are using these for the purposes of your business, and hence will also be eligible for refund. The only restriction is that it should not fit in 17.5, which is the block credit. Other than that, simply because these are spare parts or these are packing material, hence they are not input, hence you will not get ITC and hence you will not get refund. All this is not correct. So concluding point, stores and spares, the expenditure on which has been charged as revenue in the books of accounts and cannot be called as capital goods. And once it is not called as capital goods, it will be inputs and eligible for a refund. Next restriction is now since you are claiming the refund of accumulated ITC, for ITC in the ITC chapter itself, there is a condition that when you are eligible for that ITC, when it reflects in your GSTR 2B. This will happen when your supplier files his GSTR 1 within the due date. Now, the same condition restriction they are applying for refund of this accumulated ITC. So when you are applying for refund of the accumulated ITC, so you'll have to first prove that this ITC, which is accumulated, is also part of your GSTR 2B. If the ITC is not reflected in GSTR 2B, I will not allow you the refund of that accumulated ITC. Now, this rule has an exception where ITC, which is allowed on imports or on ISD invoices or which is paid by you under RCM first, need not be reflected in 2B, and therefore the refund of these will be allowed even though they are not reflected in 2B, because many times they will not reflect in 2B. Still, you will get the refund. Next, determination of refundable amount in case of refund of unutilized ITC on account of. So now we go to the next type of refund where the refund will be of unutilized ITC by on account of exports without payment of tax or supplies made to SEZ unit without payment of tax or accumulation due to inverted duty structure. That is, in short, all these three are again the same. You are going for refund of unutilized ITC. Now something more related to this. So now we just studied the formula or discussed the formula. Now some more restriction conditions. Before I go to that, we just take a small 5 minutes break. Moving ahead with the refund calculation part. Now, after we saw the formula, there are some important aspects in this calculation that we have to understand and keep in mind. So what does this point says? In this case of refund of unutilized ITC on these all three cases, what we all know, the common portal, that is a GST portal, calculates the refund amount as least of the following three figures. Now we are given a formula, but that is not the final refund amount. So first, the refund amount is the amount which you get as per the above formula. Fine, that is one. Two, second amount that has to be checked is the balance in the electronic credit ledger at the end of the tax period, for which the refund claim is being filed after the return in Form 3B for the said period has been filed. So, one, the amount of refund you got as per the formula. Two, the closing balance of your ITC ledger. Three, the balance in the credit ledger at the time of filing the refund application. Now, what are these three figures? So let us take an example to understand this. Today, we are in the month of June. Today was the last day to file GSTR 1. Fine. By 20th, I have to file GSTR 3B. I have filed. Now, this I am filing for the month of May. Correct? Now, when I'm filing this, in this same month, that is, we are in June, I'm also filing the refund application for the month of February 2025. So now, one is I'm filing a returns for the month of May. Two, I'm also filing a refund application for the month of Feb. When I file refund application for month of Feb, how much maximum refund can be granted? The law says least of three. One, the refund amount that I'm getting as per formula. Now remember this formula which I have applied is for figures of February month because I'm filing the refund application of February. So the net ITC is of February, the numerator which is the February. So I am applying refund for February month. For February month, I have taken all the figures and computed the refund amount. Now I will compare this with the ITC balance of February month after filing the return, that is Form 3B for the said period. What is the said period? Said period is February. So second is I will find out or I will write the ITC balance of February month after filing of February month return. And third, I will see the ITC balance of today. That is the day or the point of time when I'm filing this refund application. Now somebody will say, sir, why so much complication? Why three figures? And then it is saying you will take lower of these three figures. To understand this point, I am computing refund for the figures of February. So first formula, as we discussed about, we'll take all the figures of February month. Understood, no problem. Now that will give me the refund which is available of February details. Okay, understood. Importantly, why this second figure? What was the second figure? It is the closing balance of ITC ledger after filing the February returns. Why this figure is to be taken? For the simple reason, I want to give you refund of accumulated ITC. Now, after you file the February month return, what you would have done? Whatever is the tax liability of February month, you would have paid using the credit ledger balance up to February. Now, if your credit ledger is being utilized either fully or majorly, it means whatever was your input tax credit may be proportionately attributable to export, for which I should give you refund, has already been utilized by you for paying tax on domestic supplies. So indirectly you have encashed that refund, that ITC. Now, why should I give you the refund? That is why the second figure which we see in this B point is the balance of ITC ledger, closing balance after filing of February month refund, February month returns. Because if in February month you had already utilized the ITC, which is also applicable to export for your domestic sales, the matter is closed. You have already got that amount by way of encashing your ITC. Then why should the government give you the refund? And then why you take the balance of again credit ledger of today? Because when you are filing this refund application today in the month of June, after February you filed returns for March, April, May, maybe even if there was some balance in the February month, that is even after filing of February month return, B point is showing lot of ITC balance. So it means the February balance was then there. Then means in February it was there. But in next 3 months, you have encashed that ITC. How? Because in next 3 months, you made the domestic supplies, and in domestic supplies, you utilize this ITC. So again, this ITC got encashed to you in the subsequent month. So today, when you are actually filing this refund application of February, you have already consumed the February month ITC in further months. So today you are not having any balance in ITC, or the balance of ITC is very less. So why should I give you the complete refund? So that is why one refund calculated as per formula, which we understood the logic earlier, compared with balance of February month's ITC ledger after February return and the balance of ITC ledger today. And out of the three, we have to take the least, as I explain you the reason. Fine. Now, one more point, they have said that while applying the formula, you will take the ITC balance. Now, ITC will comprise of CGST also, SGST also. So the question is whether I have to do tax-wise, that is separate refund calculation for CGST, separate for SGST, separate for IGST. They are saying no. You add up all your credit ledger balance, C plus S plus I, whatever you are having. And for this consolidated credit ledger balance, you do the formula, that is, do the proportionate calculation. Now, when you are doing this, you get a refund amount which is involving all the three types of taxes, C, S, I, everything. Now, what it says, after calculating the least of the above three, as above, the equivalent amount is to be debited from the electronic credit ledger. This we also discussed above, that whenever you are making application, refund application on the basis of unutilized ITC, this amount at the time of making this refund application will be debited from your electronic credit ledger. But important point to be kept in mind here, in the formula, I have added all my ITCs, all three types of ITCs, and computed one figure of refund of ITC. So let us say collectively, the total refund of all the three ITC combined is coming as 1,000, and it is the least of three also. Now I have to debit my credit ledger today. So while making application for this refund, whatever refund, let us say this 1,000 I want to take from the government, I will be debiting it from my credit ledger, because to that extent the credit ledger balance has to reduce, because you are going to get the refund. Now, while debiting it, I have to debit it in this order, in this sequence. First, I will debit my IGST credit balance, whatever is there in my IGST credit ledger. If after that also, let us say I have to take refund of 1,000 as per the least of the three, this 1,000 I will first take by debiting the IGST credit ledger. Let us say it is 600. Out of 1,000, 600 is debited there. Balance 400. What I will do? Now I will go to the CGST balance, SGST balance, and I will have to debit that balance also equally to the extent of balance available. And in the event of shortfall in the balance available in a particular credit ledger, let us say central tax, the differential amount is to be debited from the other credit ledger, that is state tax. So I have to claim refund of 1,000 as per calculation least of above three. This 1,000 will be by first debiting or utilizing the IGST credit balance. So I debited the entire IGST, which was 600. Now balance 400, I have to debit 200 to CGST, 200 to SGST. So they are saying this you have to debit equally. However, if equally I get 200, 200, but my CGST balance is only 150. So I cannot debit entire 200 to CGST. So what I will do? I will debit 150 to CGST, which is the maximum possible amount, and balance 50. I will debit it in my SGST credit ledger. So SGST will get a debit of 250. So this is what is about the formula and working. Next, cases where refund of ITC is not allowed. Refund of unutilized ITC is not allowed if goods which you have exported, because you are claiming this refund for export only. So the goods which you have exported are subjected to export duty. Now see, presently today, export duty is not there on majority of your goods, because every country government wants to promote exports. Equally, we also want to promote export. So we have no export duty on our goods. However, very rarely, very few goods today are liable for export duty for the simple reason government does not want to promote the export of those goods. So the simple way is put duty on them. For those goods, if you are exporting them, obviously you are paying the export duty. As another, you can say punishment, or you can say another way of restricting the export is, I will not give you the refund for such exports. So even though we allow you refund of unutilized ITC for exports, but such goods on which already export duty is applicable, I will not give you the refund of unutilized ITC. They have tried to clarify what does this term subject to export duty means. It means where the goods are actually liable to export duty and suffering export duty at the time of export. Therefore, if goods in respect of which nil rate is prescribed in the Customs Tariff Act, that is the export duty rate is nil, which are fully exempt, then or which are not covered under the second schedule cannot be subjected to any export duty. It means where actually some amount of export duty payable, only those goods are fitting here, and for those goods export, you cannot claim refund of unutilized ITC. Next, refund of ITC shall not be allowed if the supplier of goods or service or both has availed drawback in respect of the CGST or claims refund of the IGST paid on such supplies. So, second case where I will not give you refund of your ITC is where you are claiming that ITC in the form of drawback. So there is a concept called as drawback in customs, whereby whatever taxes you have paid at the time of import or for the purpose of manufacturing, whatever taxes you have paid on your raw material or input side, that is allowed to you as drawback at the time of export. So if the tax which you have paid, like this IGST which you have paid on import, is already giving back or given back to you in the form of drawback, so I cannot give it back to you again in the form of refund. Otherwise, again, it will be unjust enrichment, because same amount will be given back to you twice. One by the name of drawback, second by the name of refund. So this will again be wrong. So what they have said, that we will not give you refund if you are claiming drawback of the same amount, or where you are exporting under which option, under the payment of IGST option. So anyways, where you are exporting with IGST payment option, there can be no refund of input unutilized ITC. Next, some more restrictions. No refund shall be allowed if the amount is less than 1,000. So in short, they will not allow refund for very small amount, because this all refund etc. is already cumbersome. So if the amount is below 1,000 or 1,000, they have clarified 1,000 for each tax. So maybe total refund is more, but tax wise CSI, each tax is less than 1,000, then I will not allow you the refund of such very small amount. Next, refund in case of goods or services exported outside India. So now what they are trying to explain is, what are the different refund rules? So what it is saying, as discussed in the previous chapter, that is import export under GST. Export of goods and services are zero rated. A registered person making zero rated supply may supply good service under bond or LUT, okay, without payment of IGST and claim refund of unutilized ITC, which we just discussed. Further, notified class of persons who are making the same zero rated supply or notified class of goods or service may be exported now in the second option, which is on payment of IGST, and then the refund of such tax paid can be claimed. So this is our another option. You pay tax on the outward side, export it, and get back the refund of this outward side tax. Now we discuss this. So in the ensuing paras, refund under each of the two cases shall be discussed in detail. First refund is where you're exporting with payment of tax, which is called as the with payment of IGST option. Now in such case, application for refund claim. The shipping bill or the bill of export itself is deemed to be the refund application. If you remember, I have been repeating this even in the previous class we discussed. Today I repeated it in the revision, that where you are going by this first option, that is what you are exporting with payment of tax. So if you are taking this option, there is no need to file the RFD 01 application, because once you file the shipping bill at the time of export at the customs, that filing of shipping bill is deemed to be your application for even the refund claim. So once you file this, the GST portal and the customs portal, which are interlinked, you file your GST returns for that month showing this export. You pay the IGST through GSTR PB, and then your GST portal and ICAI portal matches with each other, and you will be getting the refund automatically without any application. Again, withholding of this refund. This refund, which should come to you automatically, may be withheld. One, where a request has been received from your jurisdictional commissioner. So your jurisdictional commissioner has put a request saying that this person's refund should not be allowed automatically, should be withheld, because your jurisdictional commissioner feels that there is some amount recoverable from you, or this refund is fraud. Or the proper officer of the custom determines that the goods were exported in violation of provisions of custom. Second, where refund will be disallowed is where your custom officer proves or claims that you exported, but the export was in violation of the customs. So again, it means you are not eligible for refund. Third, the commissioner in the board or an officer authorized by the board on the basis of data analysis and risk parameter is of the opinion that verification of your credentials, including your ITC, is required. In short, they are doubting you. We call this as that they have put you in the risky exporter category. Once they put you in the risky exporter category, now again, your refund will be withheld and you will not be allowed the refund automatically, which otherwise is this option. In such a case, now you will be informed about this, and since the refund is not being allowed to you, you will now have to go and meet either your proper officer or the custom officer, and you have to justify your claim, proving to them that why the refund should be allowed. If you are able to remove the defects which they feel is there, then the refund will be granted. Otherwise, your refund may be withheld permanently. Next, refund to government of Bhutan on the exports to Bhutan. So the central government may pay the refund of IGST to the government of Bhutan on export to Bhutan for such class of goods as may be notified. Where such refund is paid to the government of Bhutan, the exporter shall not be paid any refund of this IGST. So for certain goods, our government has signed a particular agreement with Bhutan that you will be paying tax to the government and the government will be not refunding that tax to you. Why? Because it has to pass on this tax to Bhutan government. Next, clarification on whether the refund claim can be preferred in respect of specified goods sent taken out of India but not brought back. Now, what is this? Many times, when you send the goods outside India, like you are sending them for some exhibition being held outside, technically it is not an export because you are taking it outside yourself with this pre-condition or with this pre-intimation that these are taken for a no supply case like for an exhibition. In such a case, you may be bringing back the goods after the exhibition is over. So what is the tax treatment? So what they say, the supply would be deemed to have taken place. Now, actually, there is no supply. However, if you are not able to prove this or do this, we will deem that the supply has happened. So when we will deem that the supply has happened? One, on the date of expiry of 6 months from the date of invoice, if the specified goods are neither sold nor brought back. So either in the exhibition you have to prove that you have sold the goods, fine. If not, you have to bring it back to India within 6 months. If not brought back, we will deem it to be sale. Second, on the date of sale in respect of such quantity of specified goods which have been sold abroad. So this is obvious where you yourself are claiming that you have sold it, the department will consider this as a sale. Now, it is clarified accordingly that the sender can prefer refund claim even when the specified goods were taken out of India without execution of bond if he is otherwise eligible for refund as per the provisions of 53, 54.3 and 89.4 in respect of zero rated supply after he has issued the tax invoice. So in short, they have clarified that even for goods which are taken out for exhibition, you can apply for refund if all other conditions of refund is satisfied. Next, export of service. Now, importantly, when you are exporting goods with payment of IGST option, as we have been discussing, there is no need to make a refund application. The refund will come automatically. However, when you are exporting service, even though you are exporting this with payment of IGST option, however, the refund does not come automatically because here customs is not involved. See, you were getting refund in case of goods because custom was involved. Now, since in case of service, customs is not involved, you will not be getting the refund of this export of service, even though it is with payment of tax. So here, whenever you are exporting service, even with payment of tax option, you have to still file the RFD01 application. So all this is about refund under the first option, that is with payment of IGST option. Now we go to the second, refund of accumulated ITC. Here the export may be of goods or of service, which is under bond. This we have been discussing. Now there are some clarifications. Clarification in respect of admissibility of refund, where an exporter applies for refund subsequent to compliance of provisions of 96A. Now what does 96A says? As per 96A, a registered person availing of the option to export without payment of IGST is required to furnish a bond LUT prior to export, binding himself to pay the tax due along with applicable interest within 15 days of the expiry of 3 months or such further period as the commissioner may apply from the date of issue of invoice for export when, if the goods are actually not exported out of. So what does the first case says? When you will have to return back your refund. So let us say in this month, I make an invoice showing that these goods are to be exported. Now what happens practically? My factory is in some interior parts of India. I will remove the goods, I will load it on the truck and send it to Bombay port. Again, the goods may be kept at the Bombay port till the ship on which the goods have to be loaded and sent outside comes, and then the loading will start, then the ship will leave, and finally the export will happen. Now this may take some time. Now let us say on 30th of May, that is the end of previous month or second last day of the previous month, I showed that I'm making export of certain goods which will happen from the Bombay port. My factory is in interiors. So that day I prepared the export invoice, I loaded the goods and I sent it to the Bombay port, and it would be taking 10 days to reach the Bombay port. After 10 days, my goods reach the Bombay port. So it is somewhere 9th of June, the goods have reached Bombay port. Over there, they are kept in the warehouse till my ship comes. The ship comes after a month. So now it is 9th of July. Loading of the ship starts. Everything loaded, every supervision checks done by the custom officer. It makes it 25th of July. And then only my ship leaves India. That is the final export happens. Now, what it proves or what it shows that there is a possibility that in May, I have shown it as exports in my invoice and hence my GSTR 1 and 3B returns and maybe even claim the refund. But ultimately, for some reason, these goods are not exported and 3 months have passed. Then this provision 96A says, boss, you will have to refund me back the refund ticket. Why? Because if you are showing or claiming that these goods are to be exported and on that basis I'm giving you refund, and finally if the goods are not exported, so it is the straightforward breach of the condition of export. Once it is breach of the condition of export, nobody can allow you the refund. Hence, if you have taken the refund, you'll have to return it back. Second, you will have to refund back the amount in 15 days after expiry of 1 year or the period allowed under FEMA, including extension permitted by RBI, whichever is later, from the date of invoice for export or such further period as may be allowed when if the payment of such service is not received by the exporter in convertible foreign exchange or in Indian rupees where permitted. So second case where I will ask you to return back the refund amount with interest is when even after the expiry of the period allowed by FEMA and even the extended period allowed by RBI, you have not received the money. See, students, please understand. In case of goods, at least there is some physical check at the port. So there is a proof that at least goods have been exported because the custom officer at the port has checked before loading of the ship and before the ship leaves India. When it is of service, nobody has any check or control. There is no proof that services are exported except receiving the payment. That is why for services, we have read this earlier also, the payment receiving is an important condition which is not there in case of goods. Why? Because for goods, you have another proof, a very strong proof. That is what is the custom records. But there is no such custom records in case of services, and hence for services, this condition of payment should be received has been. Now, there are instances where exporters have voluntarily made payment of due IGST along with applicable interest in case where goods could not be exported or payment of export of service could not be received within the time frame. A doubt arose as to whether subsequent to export of the said goods or realization of payment in case of export of service, the said exporters are entitled to claim not only refund of unutilized ITC on account of export, but also refund of IGST and interest so paid in compliance with the provisions of 96A. So what is clarified? It is clarified that in case subsequent to export of goods or realization of payment in case of service, the said exporter would be entitled to claim the refund of IGST so paid earlier on account of goods not being exported or payment not being realized in case of service. However, no refund of interest paid would be allowed. So what is this point? So as per 96A, since I could not export the goods in 3 months or I could not realize the payment of service in 1 year, I have to refund back the refund. Agreed. And that 96A says along with interest. So I refunded back the refund along with the applicable interest. After a few months, I comply with the condition. That is, now the goods are finally exported. The delay happened because there was some problem with the ship, there was problem in the route, or now, as you are saying, because of some strained relations between different countries, there is some problem in the export because of which my export consignment got delayed. But eventually, after a few months of delay, I actually exported the goods. Should I now not get the refund? The law says yes. This is what is clarified. They say I will refund you back the IGST portion which you had paid back. But I had taken this portion along with interest. I will not refund you back the interest. I will only refund you back the GST. That is what is clarified. And then comes rules 96B. Interesting, but also strange. What it says, recovery of refund of unutilized input tax credit or IGST paid now on export of goods where export proceeds are not realized. Now, this is strange. Until above, what we were discussing, that for goods, there is a substantial proof of export. What is that proof? The export documents. So you do not require any proof in the form of receiving the payment, at least for goods. Yes, you require this proof for service because for service, there is no other payment of exporting the service except for receiving the money. But for goods, once you are exporting the goods, your goods will be crossing the customs. The customs officer will be checking. So there is substantial proof that you have exported the goods. However, now a new condition has been brought in the form of Rule 96B. What it says, firstly, they have added this restriction in the Act. Otherwise, the rule could have been challenged that the rule is ultra vires because Act does not have a condition. So they have added this in the form of a proviso to Section 16(3) of the IGST Act, which says that a registered person making zero-rated supply of goods without payment of tax shall, in case of non-realization of sale proceeds, be liable to deposit the refund so received under Section 16(3) along with applicable interest under 50 within 30 days after expiry of the time limit prescribed under FEMA for receipt of the foreign remittance. Further, Rule 96B prescribes the manner in relation to this. It provides that proceeds of exports must be realized within the period allowed by FEMA. Otherwise, you will have to return this refund and that you have to do this within with interest. Again, FEMA has allowed some time period for getting the money, which may be even extended by RBI. So we are ready to wait till then. So until the time your payment is received either within the FEMA timelines or within the extended timelines by RBI, we are okay. But thereafter, if it is not received, 96B will trigger and you will have to pay back the refund. How? So the amounts so refunded to you to the extent of non-realization of sale proceeds have to be returned back along with interest within 30 days of the expiry of the above period. In case of failure to do so, the amount shall be recovered as per provisions of 73-74. However, where sale proceeds or part thereof in respect of such exports are not realized by the applicant within the period allowed under FEMA, but the RBI writes off the requirement of realization of sale proceeds on merit, the refund paid to the application shall not be recovered. So, we exported the goods, amount was not recovered, but this non-recovery is for such reasons which the RBI considers, and the RBI itself says, okay, you write off this amount, it will not be recoverable, but we are allowing you to write off this amount. In such cases, since RBI itself has allowed to write off this amount, now you need not refund back that amount of refund because this non-realization is still acceptable. Okay, I have some pointers. Swaminathan, earlier he had said that in a recent amendment, KYC Aadhaar authentication is need to get refund. Yes, beta. That is now some procedural amendment, so you have to do that. Smriti Singh, evidence in the movement takes place in case of goods. Yes. Swaminathan is again saying, sir, what is the time allowed by FEMA? See, FEMA allows, if I'm not wrong, after the end of the financial year, I think it allows more 6 months, which is further extendable up to 9 months. So that is what is the time allowed by FEMA. Now, where the sale proceeds are ultimately realized. So today they are not realized, the FEMA time limit is over, but they are realized subsequently, either in full or part, after the amount of refund has been recovered. So since it was not realized within the FEMA time limit, you return back the refund along with interest. Now, subsequently, this amount is realized. And the applicant produces the evidence about such realization within a period of 3 months from the date of realization. The amount so recovered from you shall again be refunded back by the proper officer to the applicant to the extent of realization, provided the sale proceeds have been realized within the extended period permitted by RBI. So if you are getting the amount recovered, though late, but within the time limit permitted by RBI, you have to submit the proof and we will return you back the refund which was recovered. Next. Now comes the next category, refund of tax wrongly collected collected and paid. Now, what is this? This is Section 77 of the CGST and the SGST Act, and you have similar Section 1919 of the IGST Act. What it says? It says that there was a mistake by the supplier. What is the mistake? Mistake was in classifying. The supplier classified it as interstate supply, but it was actually intrastate supply, or vice versa. It was intrastate supply, but he classified it as interstate supply. So there was a wrong classification by the supplier. It means wrong tax was paid. Now, in such a case, the law section 77 of CNS and 19 of I says that subsection 1 says you have to pay the right tax and take the refund of the wrong tax paid. So here, as a supplier, even though I have passed on the tax burden to the buyer, still I will pay the right tax and take the refund of the wrong tax paid by me. Now, 2 points of consideration over here. Point 1, this paying of right tax can happen anytime in future, either by myself or when the officer comes for any audit and he highlights that I had paid wrong tax, so I will pay the right tax. At that time, the question is, how will I get refund of the wrong tax paid? So the law says, there is a circular also saying that once you pay the right tax, you become eligible to claim the refund of the wrong tax. So now, after paying the right tax, you apply for the refund for the wrong tax. And then the 2 years time limit of refund, which we have been studying, will start after the date of payment of the right tax. So once you pay the right tax, the 2 years time limit for making application of refund will start. And now you will apply for refund for taking back the wrong tax. Second important point which is clarified in these sections is, what about interest? Because now you are paying the right tax now. It may be after 3, 4, 5 years. So what about the interest? The law says no interest. This is given in subsection 2 of both these sections. Subsection 2 of both these sections says, in this case, even though you are paying the right tax today, which is late, there is no need of paying any interest. Why? The logic is because you have already paid some tax. Though it was wrong, you made a wrong classification of supply, you paid C plus S. Today the officer comes and says, boss, this is IGST tax, you should have paid IGST. Okay, you are ready to pay IGST, but there is no, you can say, loss to the government because you had already paid some other tax. That is why subsection 2 says there is no need to pay any interest. Next comes refund to these UN bodies or the foreign embassies who have opened their office here. For them, the separate refund section is 55. For all of us, whatever refund we are studying about, all the types of refund are covered in 54. But for these embassies, United Nations bodies, they have to apply for refund in 55. Now, what is this refund for? See, these bodies are set up here under some bilateral agreement or as per our UN convention, whereby you are supposed to have offices of different UN bodies, plus of all the other countries, the embassy should be there. Now, these embassies or UN body has opened their office here in India. And since they are running a setup, they may be incurring, not maybe, they are definitely incurring a lot of expenses on which maybe in some expenses where IGST is applicable, they have already paid IGST or any C plus S to the supplier from whom they have purchased those goods or service. Now, since either they are making no outward supply or their outward supplies are not liable to tax because they are in UN bodies, etc., they will always have accumulated ITC of whatever taxes they paid on their input side because they don't have to pay any tax on the output side. In such a case, this accumulated ITC will become a cost and a loss to them. That should not happen. That is why they have been allowed refund under section 55. Again, they have to make application for the refund within 2 years from the last day of the quarter in which such supply was received. So once you make purchases after the end of that quarter, within 2 years, you have to make application for refund. Who is entitled to refund? The entitlement to refund is government will on recommendation specify what any specialized agency of United Nations or any multilateral financial organization or any consulate or embassy or other persons who are notified. Now, who are notified? This is the list of those persons who have been notified. Further, in exercise of the said power, the CSD, that is the Canteen Store Department under the Ministry of Defense, has been notified as a person shall be entitled to claim a refund of 50% of the applicable CGST or IGST paid back. So the CSD, which is the canteen run for the military people, they are also covered in this, but they are only allowed a refund of 50%. Now, for the purpose of claiming this refund, the CSD will have to apply for the refund in different prescribed form once in every quarter on the common portal. Such application shall be dealt in the same manner as application for refund, that is RFT01. Then refund of tax paid by the applicant shall be available if 1. The inward supplies of goods were received from a registered person against a tax invoice, and the details of such invoice has been uploaded by the supplier, that is, it is uploaded in GSTR1. Second, supplier has furnished his return 3B, that is, supplier has already paid tax. Now, time limit for filing refund claim. So persons who are eligible for refund claim under 55, we already saw they have to make application within 2 years from the end of the quarter in which they have received this supply. Forms and documents. So there will be a separate prescribed form, a separate form for them, not our regular form RFT01, a separate unique form will be given to them. And they should make the application once in every quarter. Then other points are same: acknowledgement, conditions to be satisfied for refund, supremacy provisions in case of inconsistency. Now, what is this? Where an express provision in a treaty or other international agreement to which the President or the Government of India is a party is inconsistent with the provisions of these rules, such treaty or international agreement shall prevail. What it means? Now, our President has signed certain treaty with different countries, whereby, let us say, it is said that they will get refund of full amount or they will get refund of XYZ amounts. So even though these amounts are not allowed as per our Indian rules, still the treaty signed by President will have supremacy and hence refund will be allowed. Okay, there are a lot of questions. Let me first take that. So I've already answered this. What is your time around? Sir, GST is not flexible as compared to income tax TDS with respect to moving from one head to another head of tax. Yes, you're right. To claim under 55, whether even has to register under GST. Yes, but also they are already registered and they get UIN. Correct? Debrata is saying volume of voice is too poor. Swaminathan, it is not UIN, it is UIN. Debrata, I'm sorry. Actually, I'm having a slight health issue today. So I'm slightly low today. Still, if my voice is not audible, let me know. I'll try to increase my volume. Next, specialized agencies which are notified under Section 55, that is all these persons, are also entitled to refund of IGST paid on import of goods. So along with local whatever purchases you are making, if you are also importing goods, whatever IGST is paid on import of goods, they are eligible for refund of that also. Now, next comes interest on delayed refunds. Now, this is interesting. Normally, you have to pay interest to government. However, Section 56 gives you interest when, if the amount which is due to you as refund is not given to you within 60 days from the date of receipt of application, then the government will pay you interest. But the rate is very low. They will pay you interest at the rate of 6% per annum. So when you have to when you have to pay interest, it is at the rate of 18% per annum. But when you have to receive interest, that is when the government has to pay, they have kept the rate as only 6%. So interest is payable to the applicant for the period. Which period? Beyond 60 days from the date of receipt of such application till the date of refund of such tax. Now, Interest on amount refundable consequent to order passed in an appeal. So let us say this matter was a part of appeal and the appellate authority allowed you the appeal saying that yes, you can take the refund. Now, in such cases, that is where the refund arises because of the order of adjudicating authority, appellate authority, etc. And it is not refunded within 60 days of the receipt of application, the refund is now liable for interest. And in such case, the interest payable is now 9%. So where the matter went in for appeal or any type of proceedings, and after the result of the proceedings, the refund is proven to be given to you, and this refund is not given to you within 60 days from the date of receipt of application filed, consequent to such order, interest will be payable on such refund at 9%. So, where despite of there being an order of some authority, still if the department is not sanctioning the refund within 60 days, the interest will increase to 9%. Next, order sanctioning interest. Where any interest is due and payable under this section 56, the proper officer shall make an order along with payment order in prescribed form. Such order shall specify the amount of refund, period of delay, and the amount of interest. And then comes the last part, that is consumer welfare fund. We already studied where this will be required, where the refund is eligible, but it is not eligible to you, and it can also not be kept by government. So it has to be credited to consumer welfare fund. 57 stipulates that the government shall constitute a fund to be called as consumer welfare fund, and there shall be created to the fund what? Amount of refund which is determined by an order passed under 54. So it is firstly determined that refund is maintainable. Any income from investment of the amount created to the fund. So when the fund is created, the amount in the fund is invested, through interest coming on that is also part of the fund, and any other monies which is received in it. Amount to be created to or paid from consumer welfare fund, we can ignore that. That is not relevant. Next, interesting part, refund of the IGST paid on supply of goods to tourists leaving India. Now, this is a very interesting point. Now, I am having a shop, let us say a gift shop. A foreigner comes in my shop, and it is very common a foreigner may walk into your shop to buy something. Now, I can understand from the outfit that this person is a foreigner, from the dialect, from the language, but that does not mean that I will give any special treatment to the foreigner when it comes to tax. However, this section says that firstly, when a foreigner is buying goods from you, now the foreigner is buying goods from your shop. So it is like a C+S supply, intrastate supply. However, you have to collect from the foreigner the residence proof and all. And once you do that, the tax that you will charge to the foreigner will be IGST and not C+S. First thing. Now, once you have charged this tax to the foreigner and you have given them the invoice, this foreigner, who is called here as a tourist, why? Because he has come for a short period of time. So that is what is a tourist. So the tourist means a person who is not going to stay for more than 6 months and who has come to India for a legitimate non-immigrant purposes. So such a person is called as tourist. So when I'm selling the goods to the person, I will be charging IGST, and the tourist at the time of leaving India can produce my invoice, and at the customs they can claim the refund. Now, clarification in respect of certain challenges faced by the registered person in implementation of provisions of law. So this is not required. You can just ignore this. So students, these are the provisions relating to refund in detail. I'm sure you would have understood everything. I'll just go back to your queries. If any, is that period of 60 days from advance or from original application? It is from double EBITDA. That is the application for that refund on the basis of order. So first you get an order. On the basis of order, you file a refund application. From that date, that is the date of refund application, which is after the order. If 60 days refund is not given, then the interest becomes 9% and not 6%. So one, where a normal refund application is filed and it is delayed 6%. Where your matter was in appeal, and as per appeal, the order comes that, okay, this tax was wrongly paid, it is refundable. So you get the order of refund from an appeal. Now, once you get an order of refund from the appeal, automatically refund is not received. Again, you make an application, but this time while making application, you select which application on the basis of order. Now, when you make this application of refund on the basis of order and you are not given the refund within 60 days of this application, which application? Refund application after the order is received, then the rate becomes 9%. Understood, beta? Perfect. Great. So we end this chapter over here. Now, before we go to the next chapter, let us take our balance break of 10 minutes. So we take our break of 10 minutes now. And after that, we will go to the next chapter. Thank you. Just a minute. Okay. Let us go to the next topic. Not very lengthy. I consider this as much simpler than the earlier two topics. So what is this? The topic heading is liability to pay in some specific cases. Now, first is liability to pay in case of transfer of business. Now, this is interesting, where either wholly or partly your business is transferred. How? By way of sale, gift, lease, leave, license, etc., or in any other manner, up to the time of such transfer, the transferor and the transferee are jointly and severally liable wholly or to the extent of transfer to pay interest or any penalty. Where the transferee carries on such business either in his own name or in some other name, transferee shall be liable to pay tax on the supply of goods or service or both affected by him with effect from the date of such transfer. So, what is the first section saying? Wherever I transfer business to you, so whatever is the liability till the date of such transfer, that liability, which may be towards tax or interest or penalty, is applicable jointly also and independently. Severally means independently also to both transferor and transferee. So the law empowers the government or the department to recover tax either from the transferor or transferee for the liability up to the date of transfer. Thereafter, if the transferee is carrying on the business in its own name or even if the name has changed, after the date of transfer, the recovery can only happen from the transferee. However, in case of death of sole proprietor, transferee will be liable to pay tax, interest, penalty due from the transferor because now the transferor has expired, has deceased. So the transferor cannot be held liable. In such cases, the transferee, whoever is taking over the business, which will generally be some family members, that person will be solely liable. So this is the first special case of payment of tax. Then comes next scenario, liability in case of principal agent relationships. Now what it is? Agent is either making an outward supply or receiving goods on behalf of the principal. So agent may be the input side agent or the output side agent. Now in such cases, the agent and the principal shall be jointly and severally liable to pay tax on such goods. So where there is a principal agent relationship, section 86 says both the principal and agent will be held liable for the transactions, and again the liability between them shall be jointly also and independently also. Next, liability to pay tax in case of amalgamation demerger. Now you all understand what is amalgamation demerger. Now this may be either because of some court order or it may be otherwise also, that is mutually you have agreed, there is no need of going to court. Now in such a case, order is to take effect from the date earlier than the date of that order, that is okay. Now such supply or receipt of goods and goods between two or more of such companies or from each other, such transaction shall be included in the turnover of supply or receipt of the respective companies and they shall be liable to pay tax accordingly. Now what is this point? Try to understand this. So we are talking about the case of amalgamation demerger. This amalgamation demerger is resulting either because somebody has moved the court and the court has ordered this, or it is happening mutually. Then, and most important point, the order is to take effect from some prior date. So let us say the order has come today, that is 11th of June. But the order, this will happen in case of court, that they say that this amalgamation demerger, we are going to apply from 1st of April. Now this generally happens where We both have agreed to do this amalgamation demerger, but the procedure took time. So eventually the amalgamation got concluded today. All formalities got concluded today, but we had agreed that this will happen from 1st of April. In such a case where the amalgamation demerger has to take effect from a prior date, then what will happen? That is what is said. So what it is saying, the supply or the receipt of goods or goods between any two or more of such companies or from each other, such transaction shall be included in the turnover of supply or receipt of the respective companies, date from which amalgamation demerger is effective, and the date of order of the court or tribunal for amalgamation. So this period. So the order is coming today and the order is made effective from the prior date. So in this period, whatever transactions have happened, such transactions shall be included in the turnover of supply or receipt of the respective companies. So what it means that you have decided that the amalgamation has to take effect from 1st of April. Now, it took around 2.5 to 3 months to conclude all the transactions. So effectively today, the amalgamation has happened or become effective, but we had planned that this will happen from 1st of April. In such cases, whatever transactions have happened between this period, the transactions shall be treated as transaction of respective companies. Obviously, it cannot be treated as transaction of both the companies. These companies shall be treated as distinct persons for the period till the date of such order, and registration certificate of the said company shall be cancelled with effect from the date of such order. So between this period, whatever transaction happens, they shall be taxable only to one of the companies. Which company? The company which is supposed to do the transaction. So effectively, the basic point that is coming out from this particular section is that for this period where the amalgamation concluded today, but it was supposed to take effect from 1st of April, the transaction, whatever has happened, will be taxable only to one of the company, that is a respective company, which will be in this case the amalgamated company. Next special scenario is where a company is in liquidation. Now try to relate this with companies law, where you have already studied about liquidation. So the liquidator shall give intimation of his appointment to the commissioner within 30 days. Same thing you have studied over there. So once a liquidator is appointed, he has to inform to everyone that this company is under liquidation and I am appointed as liquidator. Now here he is informing the GST department, so GST commissioner. The commissioner will make inquiry at his end. What inquiry key? He will ask his officer to do inquiry on this company to find out if there is any output liability or input liability pending to be recovered from this company. If the commissioner gets any report saying that yes, this company has some outstanding liabilities, then what will happen? The commissioner will inform the liquidator about this particular amount. So it will inform the liquidator that, boss, according to my calculation, let us say 50 lakhs is payable. So the liquidator has to provide for tax, interest, penalty payable or likely to be payable by the company within 3 months of the receipt of intimation. So liquidator intimated within 30 days to the commissioner. Commissioner has to revert back within 3 months intimating what according to commissioner is or could be the probable outstanding liability. Now, if such tax, interest, penalty cannot be recovered from the company, the directors during the period during which they were directors, and if the liability pertains to that period, shall be jointly and severally be liable to pay unless they prove that the non-recovery cannot be attributable to their neglect or misfeasance or any of their breach of duty. Now, what is the liability of the directors of private company? Any tax, interest, penalty due from a private company in respect of any supply for any period, if it cannot be recovered from the company, then the directors of such company who were director during those periods shall be jointly and severally be liable to pay such tax, interest, penalty unless they prove that the non-recovery is attributable to their mistake, and they will not be liable to this tax, interest, penalty if such private company gets converted into public company and non-recovery pertains to period before conversion. Next, liability of partners of a firm to pay the tax applicable to the firm. What does the law says? General scenario. Firm and each of the partners of the firm are jointly severally liable to pay the tax interest penalty applicable to the firm. Where any partner retires, the partner or the firm shall intimate date of retirement of such partner to the commissioner. Such partner shall be liable to pay tax interest dues only up to the date of the retirement if above intimation is given within 1 month, and date of intimation if the intimation is given after 1 month. So let us say partner is retiring today. He has to give intimation of his retirement up to 30 days, that is 1 month, to the commissioner. If the partner has given this, then the partner is liable only up to today, that is the date of retirement. But if he gives intimation after 3 months, let us say in September, even though he retired today, he will be liable for any outstanding tax of the firm up to September. Next, liability of guardians or trustees. So where a business is carried on by the guardian trustee agent on behalf of or for the benefit of a minor or any other person who is incapacitated. We know who are incapacitated: person of unsound mind, person who is not having a proper mental condition. All these are incapacitated, and obviously minors are incapacitated. In such a case, the tax interest penalty shall be levied and recoverable from the guardians or the trustees or their agents. Such tax interest penalty shall be determined, levied, and recoverable in a like manner and to the same extent as it would be recoverable from the minor or incapacitated person, as if he was major or capacitated, and as if he was conducting the business himself, and all the provisions of the law shall apply accordingly. Now, this is interesting. So, even the liability may be recoverable from the minor or the incapacitated person. Next, liability of court of wards. So, where the estate or portion of the estate is under the control of the court of wards or the administrator general or trustee or any receiver or manager of such person appointed or by the court, then the tax interest penalty shall be levied and recoverable from such court of wards or administrator general or official trustee. So where any such person is appointed for taking care of any estate or property, and later on any tax is payable, then it would be recoverable from such person who is appointed. Next, special provisions regarding liability to pay tax interest or penalty in certain cases. 1. On death of a person. What it says: if a business is continued after his death by legal representative or any other person, such legal representative or other person shall be liable to pay tax interest penalty due from the deceased person. If the business is discontinued, the legal representative shall be liable to pay tax interest penalty out of the estate of the deceased person to the extent to which the estate is capable of meeting the interest. So what is the difference? If after the death of a proprietor, let us say I become the owner of the business because of I am the legal representative and the business comes to me by way of inheritance. In such a case, if I continue the business, I will be liable for entire tax interest penalty even of the deceased person. If I close down the business, I am not continuing the business, I will be liable only to the extent I get the estate of the deceased person. I am not liable beyond that. The successor shall be liable to pay tax interest penalty due from the transferor in case of transfer of business due to death of the sole proprietor. Okay. Swaminathan is saying if the estate of the business is not available in that case, no, but that is the point. If I'm not continuing the business, then, and if no estate is coming to me from the deceased person, see, the estate may be any estate. It may be even a house of that particular person. It is not necessary only the business estate should come. So if I am given the estate, any property, then I'll be required to pay the tax interest penalty out of that estate. It may not necessarily be only business estate, right? Next, on partition of property or HF or AOP. So we all understand this partition of Hindu undivided family. Now, if there is a partition of HF or there is partition of AOP, what happens? Where property of HF or AOP is partitioned, so it is divided. between the members of the family or between the AOP members, then each member shall jointly and severally be liable to pay the tax interest penalty due up to the time of partition. So where you are getting share in the property of HUF or AOP, you are liable to pay the tax interest penalty. Next, in case of dissolution of firm, where a firm is dissolved, every person who is a partner shall be jointly and severally be liable to pay the tax interest penalty up to the date of dissolution. So these are some specific provisions relating to the liability to pay tax. Now, we come to again a very important section, again from the point of view of exams, that is penalties. I'll request everyone to make a proper note of this chapter. So, what are the different offenses for which penalty is applicable? Now, see, there are two different terms. One is penalty, which is a punishment, and the other is offense. Offense is a wrongdoing. Now, importantly, please understand this. There are two things in a taxation law. One is a mistake, and one is an offense. What is the difference? See, when there is a mistake, I will only charge you interest, late fees, like you delayed in registration, you delayed in filing returns. So whatever was asked by the law, if you don't do that, yes, there will be a punishment, but the punishment would not be very severe. However, where the law itself treats your mistake as severe, we call it as an offense. So, two types of mistakes you can say, severe and non-severe. For severe mistakes, the law imposes penalty, and if it is a repeat mistake or if it is of a very big amount, the law may also provide for prosecution. So prosecution is putting behind bars. Now, we have to study this chapter from two perspectives. One, what are those mistakes or wrongdoings which are considered as an offense, that is a severe mistake? And two, what are the applicable punishments, which may be in the form of penalty, prosecution, etc. So let us start with this. Let me just show you what is there. Before this, you have the definition. So I'm not going through that. We are directly going to the main part. Now, remember this section number 122, which is penalty for offenses. What it says. Now, interestingly, you will find that in different provisions, different terminologies are used. In some provisions, the law uses the word registered person. In some provisions, the law uses the word taxable person. And in some other provisions, the law uses the term any person. I hope you understand the difference between the three. Registered person means the person who has taken registration. Taxable person means either you have taken registration or you have not taken registration, but you are liable for registration. Interesting, huh? So, two types of person. One who has taken registration is registered person. Taxable is the person who has taken registration or not taken registration, but who was supposed to take registration because of 22 or 24. Both persons are called as taxable person. And then third comes any person. So any person means maybe anyone, may not be even connected with GST law. Now, when you're reading the penalty provisions, you have to be very specific as to what penalty is to whom. So first we are studying subsection 1, which is making a reference of a taxable person. So a taxable person is that person either who is registered or who was supposed to be registered. Now, what are the mistakes which will be considered as severe and hence liable for penalty? What does the law says? The law says, first, any person who supplies goods, service, or both without giving the invoice, or issues an incorrect or false invoice with regard to any supply. So see, you can clearly understand from this why it is put in the category of offense. Because what you have done, you have supplied goods, but you have not given invoice. Now you can understand why it is so severe. Because when you are selling goods, but you are not giving invoice, it is a clear-cut case of you trying to evade tax. I hope this is clear. So when you are supplying goods or service, but you are not issuing invoice, in this particular case, this becomes a clear-cut case of fraud, or I will say intention to evade tax. Please be clear. In the same point, the second offense which is given is issues an incorrect invoice or false invoice. So you have issued an invoice, one, which is incorrect. Incorrect, why? Because you have taken wrong amount, you have taken wrong rate, etc. Or you have given a false invoice. Now, what is a false invoice? A false invoice is an invoice which is actually not allowed in the law because there was no supply happening. Still, you gave the invoice. So, this becomes a false invoice. Second liability is, or second offense is, issues an invoice without supply. So, which is this case? So, now it is like you can say again a false invoice, or here we call it as a bogus invoice. So, you are actually not selling anything, no goods, no service, but you are giving a bogus invoice. Again, that will be an offense. Third, collect any amount as tax but fails to pay the same to the government. Again, understand this. So, you have collected some tax. Now, when you collect something by the name of tax, it is compulsory that you give it to the government. If you don't give it to the government, it means you are keeping, you are retaining the government money, right? I hope this is clear. So, this is again a very severe crime, correct? Great. Fourth, collects any tax in contravention. What happened? Collects any tax in contravention of the provisions of the Act but fails to pay the same to the government beyond the period of 3 months. So, where you have collected any tax, now it may be not collectible. Why? Because let us say it was an exempt supply, you wrongly collected tax on exempt supply. Okay. Now, if it is a wrong tax collected, no problem. The rule is even a wrong tax should be deposited with the government. So where you collected any tax, even though in contravention, you still have to pay it to the government. Next, where you fail to deduct TDS or deducts an amount which is less than the amount which is required to be deducted, or where you fail to pay this amount to the government. So this will again be an offense. So TDS not done properly, again an offense. Next, fails to collect tax. So TCS not done properly, again an offense. Now all this was relating to your outward. Now coming to inward. You take or utilize input tax credit without actually receiving the goods or service either fully or partly. So again, a bogus ITC. Why bogus? Because where you have not received any goods or service, there is no question of any ITC. But you have taken, it means it is a bogus ITC. Next, fraudulently obtains refunds of tax. So we just studied the chapter of refund. We studied when refund is applicable. Now here, maybe by giving bogus documents or by giving wrong information, you are claiming a refund. So this will again become an offense. Next, takes or distribute ITC in contravention of Section 20, which is the ISD provisions. So ISD provisions allows you to take the tax which is paid by your head office, and the head office will give you the credit using the ISD invoice. But if you have done this wrongly, then there is a contravention. So the ISD has taken wrong tax or has distributed this wrong tax, that is the ISD, that is input tax. In that case, the ISD will be liable for penalty. Next, falsifies or substitutes financial records or produces fake accounts or documents or furnishes any false information, and your intention is to evade tax. So where you are fabricating the accounts or you are giving fake documents, and obviously why you are doing this, because you want to evade the tax, again it will be offense. Next, is liable to be registered, correct, under this act but fails to register, furnishes any false information with regard to registration particulars. So first, either you did not take registration though you were supposed to get registered, or you have given false information when you are applying for registration. So you have taken, in short, false registration by giving false information. Then obstructs or prevents any officer in discharging his duties. So let us say officer comes for any type of action like search or audit or survey, and you stop that officer who is actually legally doing his work. Again, it will be an offense. Next, now this is for a transporter. So up till now, all offenses were for the businessman. Now it is for the transporter. The transporter is transporting any taxable goods without the cover of document as may be specified. So you require invoice, you require e-way bill. Without taking that, as a transporter, you should never transport any goods. But you are still doing that. It means you are also a party to that offense, because otherwise, as a transporter, you should not transport anything when where there is no proper document. But you are doing that. It means you are also a party to the offense. See, consignment note. See, consignment note is something different, beta. Next, suppresses his turnover leading to evasion of tax. So everything is correct, but while reporting, you have reported the turnover less. Fails to keep, maintain, or retain books of accounts and other documents in accordance with the provisions of this act or rules. So where you have not maintained proper documents. Fail to furnish information documents called for by an officer in accordance with the provisions of this act or rules made thereunder, or furnishes false information. So either you are not submitting information or you are giving false information. Supplies, transports, stores goods which he has reasons to believe are liable for confiscation. So we have provisions in the law which says that where you are doing any fraudulent practice, we have the power to confiscate your goods. Now, some fraudulent action had happened, it means your goods were liable for confiscation. Despite of that, you sold the goods. Despite of that, the transporter transported the goods. Despite of that, the goods were stored by the warehouse keeper, knowing that such goods have done something which is not permitted by the law, and the goods are liable for confiscation. Still, you are doing any of these things. So again, you are a party to this wrongdoing. Next. Issue any invoice document by using the registration number of another person. Super. So up till now, what you were doing was limited to yourself. Now, what you are doing is, you know somebody else's GST number, you are issuing invoices using that person's number. This is a blatant, I'll say, misuse of the provisions of the law, and definitely it is a very big crime. Tampers with or destroy any material evidence. Disposes of or tampers with any goods that have been detained, seized, or attached. So if you are destroying any evidence, like we see in many movies, or any crime related things, that even tampering evidence is a crime. So that is also part of GST law. Further, when any goods have been already detained or seized. Now you are trying to do something with such goods. Again, it is a crime. Now, if any of these things are done, the person shall be liable to penalty, which will be 10,000 rupees or amount equal to the tax evaded, tax not deducted, tax not deducted, tax not paid, tax not collected, any of whatever wrongdoings you have done. So the tax involved in that, or 10,000, whichever is higher, is your penalty. Next, any person who retains the benefit of the transaction. Now, this is interesting. Firstly, this point starts with any person. So now you are not actually the party to this particular whole thing, but you are retaining the benefit of transactions which are covered above. So I'll give you an example. So let us say a company has done any of the above offenses. Now, company is a non-living person. You are the director of the company. Now, when the company has done any of the above frauds, the company will be penalized under subsection 1. You being the director, what you have done, whatever wrongdoings the company has done, the amount arising from that wrongdoing is now with you, because obviously company is non-living, it will never keep that money. So the fraudulent money is being kept by you, utilized by you, then you are penalized under section 1. So a person who retains the benefit of the transactions covered under above clauses and at whose instance such transaction is conducted. Now see again, a company is a non-living person. So how can a company engage in the above transactions? Maybe it is you who has done the transaction in the company's name because you are running that company. So by default, you will fit in this also, that at whose instance such transaction is conducted shall be liable to a penalty equivalent to the amount of tax evaded or ITC wrongly availed or passed. Next, this next penalty is for the e-commerce operator. So now some online portal, which is called as e-commerce operator, is doing what? Allows supply of goods or service or both through the portal by an unregistered person other than a person exempted from registration. So the general rule is anybody who wants to supply through the portal should get registered. However, there are exceptions to this where some persons are not required to register even though supplying through the portal. Now, if the portal allows you to sell through the portal without taking registration, here the portal is also at fault. So then the portal will be penalized. Further, what does the portal do? Allows an interstate supply of goods or service or both through it by a person who is not eligible to make the interstate supply, like the composition dealer. So if you know, composition dealers who are registered with the portal are not allowed to make interstate supply, but if the portal allows them to make interstate supply, that is, for a composition dealer, the portal is supplying the goods of composition dealer outside the state, it will be an offense by the portal. Next, the portal fails to furnish correct details in the statement to be furnished under subsection 4 of 52, which is required to be furnished by it. So what details the portal was required to furnish, it is not furnished or it has given wrong details, again the portal will be penalized. Now what is the penalty? Shall be liable to pay a penalty of 10,000 or an amount equivalent to the amount of tax involved had such supply been made by the registered person or by a person other than the person under section 10, that is other than the composition dealer. So whatever tax is evaded because of this type of transaction through the e-commerce operator, the e-commerce operator will have to pay that much amount as penalty. Now the next category covers a registered person. So see, here itself we have found all the three different terminologies: taxable person, any person, and now it is saying registered person. So what it is saying, registered person who supplies good service or both, on which any tax has not been paid, short paid, erroneously refunded, or where ITC has been wrongly availed or utilized. Now what is the case? When it will be considered as offense and liable for penalty where the person who has supplied such goods on which tax has not been paid or short paid, right, or on which ITC has been wrongly availed or utilized. How? By reason other than the reason of fraud or willful misstatement or suppression of fact to evade tax shall be liable to penalty of 10,000 rupees or 10% of the tax due from such person, whichever is higher. And if it is for reason of fraud, shall be liable to penalty equal to 10,000 or the tax due from such person, whichever is higher. So where this particular type of offense, what is the offense? Short payment of tax, non-payment of tax, or wrong ITC is done by a registered person. If it is done without a fraudulent intention, means if it is done by mistake, then penalty would be 10,000 or 10%, whichever is higher. Where it is done intentionally, that is with the intention of fraud, penalty is 10,000 or the full amount of tax, whichever is higher. Then comes subsection 3. It is again dealing with any person who either aids or abets any of the offenses which is specified in the above clauses. Now here this person can be any person, may not be the businessman. This subsection even covers consultants like us. So even we as consultants, tomorrow when you are consultants, are having the risk of being classified here by the department. Why? What it says? Any person who aids or abets any of the offenses which were specified above in subsection 1. So the person who committed the offense is covered in subsection 1, but the person who helped this person, supported this person, like a consultant or anybody, will also be liable for this penalty under this subsection. So beta abets is what means you are supporting that. You are helping that person do that offense. That is what is abetting. Next, second, who is also covered here? That person who acquires possession of or is in any way concerning himself in transporting, removing, depositing, concealing, supplying, purchasing, or in any other manner deals with any goods which he knows or has reasons to believe are liable for confiscation. So, if you are engaged in any of these actions for such goods which you know are liable for confiscation, means the goods have committed any fraud, they are non-tax paid goods, then you should not deal with that goods. If you are dealing, you are liable for penalty. Next, receives or is in any way concerned with the supply of or in any other manner deals with any supply of service which he knows or has reason to believe are in contravention. So where now it is dealing with service. So where you are providing any such service which is in contravention of the act or rules, again penalty is applicable. And last, fails to appear before the officer. Now here they are saying central tax because we are reading CGST. The same thing applies in other taxes. So where you fail to appear before any officer when you are given a summons for appearance, then again you are liable for penalty. And last, fails to issue invoice in accordance with provisions of this act or rules, or fails to account for an invoice. All these offenses are liable for penalty which may extend to 25,000 rupees. Now understand this is 25,000 under CGST. Again, it will be 25,000 under SGST. So this is what is the penalty for different offenses which are covered in 122 subsection 1, 2, 3, right? Now we proceed further. What is given further? It says penalty for failure to furnish information return. Now, what is this information return? Please understand. What Smriti is saying, equivalent amount of 25,000 under CGST Act as well. That is what I said, na beta. So it is CGST 25, SGST 25, so total will be 50,000. See, this is what is also explained here. So this is about the last part. So penalty is leviable for an amount which may extend to 25,000 each under CNS. So total it will be 50,000. Correct? Now, some persons like banks and all these persons are required to provide the information return so that the department can collect information about other persons. So online e-commerce operators, banks, all these are dealing with other persons' information. So they are required to submit some details to the government in the form of information return. If these people are not filing their information return, again, they will be liable for penalty. Fine for failure to furnish statistics. Now, if any person is required to furnish any information or written under 151, what are these sections that you study in the next chapter? Fails to furnish such information or written as may be required under that section, that is 151, or willfully furnishes or cause to furnish any information or written which is false. So either you are not giving that information or you are giving a wrong information, then the fine will be up to 10,000. And in case you are repeating this, because you have to furnish this information every month. So if you are repeating this mistake, then for all further mistakes shall be punishable for further fine, which may be up to 100 for each day after the first day during which the offense continues, or 25,000, whichever is lower. Again, this is per act. So an equivalent amount will be also levied under SGST. What is this 151 section? It provides that the commissioner or the officer authorized by him may by an order direct any person to furnish information relating to any matter dealt with in connection with CGST Act in the prescribed time, manner, etc. So the provisions of section 124 are given in this table. Now, what is important is this penalty, that is 125. We call it as general penalty. Now, what is this general penalty? Till now, what we read was all specific penalties. Specific means where it was specified that for this mistake, this is the penalty. So offenses were specified, the name, the nature of offenses were specified, and for each type of offense, there was a penalty that is specific. Now, what does this section says? Any person who contravenes any provisions of this act. So anything which is given in the act or the rules, you do not follow. Something is asked to do, you don't do, or what is not asked to do, you do it. That is what is contravention, and for which you have no penalty given above. So whatever sections we studied, the penalty was not covered in that. Then there will be a general penalty of 25,000. Again, this 25,000 is under each act, so it will be 50. Now, what is the most important part? Besides the penalties, main section is 122. Other sections are there, but main section of penalty is 122. And the second most important section is 126. This is, you can say, somewhat in favor of the taxpayer, because these are some instructions given to the departments. What it says, general disciplines relating to penalty. The levy of penalty is subject to certain disciplinary regimes. The general disciplines which are given in 126 are as under. First, no penalty shall be imposed by any officer under this act for minor breaches of tax regulations or procedural requirement of law, or any omission or mistake in documentation which is easily rectifiable and made without fraudulent intention. So, see, while doing any business, there could be mistakes done by people. And if these are minor mistakes, or they are dealing with only the procedural requirements, means you have not breached the law, but some procedures you missed. In such cases, the general discipline or the recommendation given in 126 is for such things, penalty should not be imposed. Then, explanation given for all these terms are, what is minor breach? According to the law, minor breach is where the amount of tax involved is not more than 5,000. What is omission or mistake in documentation which is easily rectifiable? It is if the same is an error apparent on the face of record. So from the document itself, let us say invoice, it is clearly visible that I did not have the intention to make it wrong, but there was some error which is apparent, like writing GST number in a wrong sequence, or by at the time of writing amount, putting the commas at wrong place. These are all uh, easily rectifiable mistakes and apparent from the record. Now, the penalty imposed under this act shall depend on the facts and circumstances of each case and shall be commensurate with the degree and severity of the breach. So this is another principle given, that whenever you are levying penalty, please ensure that you will see the facts, and also the amount of penalty should be commensurate. Commensurate means should match with the degree and severity. Means what? Only when the severity is very high, that is, the mistake is very grave, you should impose high penalty. Otherwise, not. That is what is this for. No penalty shall be imposed on any person without giving him opportunity of being heard. This is again very important principle. So people make mistake, but before you impose penalty, you should give them an opportunity of being heard. How? By issuing a show cause notice. Next, the officer under this act shall, while imposing penalty in an order for a breach of any law, regulation, procedural requirement, specify the nature of breach and the applicable law. So whenever you want to impose penalty also, you should specify what is my mistake. You simply cannot say that because you have breached the law, I will impose penalty. No, in that case, it will not be considered as a valid action. Next, where a person voluntarily disclosed to an officer under this act the circumstances of breach of tax law or regulation or procedural requirement prior to the discovery of the breach by the officer, the proper officer may consider this fact as a mitigating factor. So let us say I committed a mistake, but I myself come to you voluntarily. Voluntarily means on my own account. And before you identified it, so you did not even know that I have made a mistake, but I honestly come to you. I myself disclose, ki, sir, see, this happened by mistake from me. In such cases, they are saying that you should consider this when at the time of quantifying, means then you should give relaxation. And then the provision of this section shall not apply in such cases where the penalty specified under this act is either a fixed amount or expressed as a fixed percentage. For instance, penalty under 125 is being prescribed as 25,000, means neither as a fixed sum nor as a fixed percentage. Hence, general discipline under 126 should be considered while imposing such penalty. So wherever the penalty is neither a fixed sum or neither expressed as a fixed percentage, then only this section applies. Otherwise, this section will not apply. So these are some important points about penalties. This is a generic point. I think you can study this. In the next class, we'll go to an important section, that is 129 and 130. So here I will stop my deliberation. Shubhankar ji is present over here. He needs to have some discussion with you. But before that, if anybody has any questions, I'll first answer that. So Swaminathan is saying show cause notice timeline to issue by PO on the penalty. Yes, beta. So whenever show cause has to be issued, it should be issued as per the provisions of law, including timeline. Yes. Anybody, any questions?
Good evening, sir.
Good evening, beta. Tell me.
Yes, during the last week of May, there was a session on mask and unmasked GST on which compilation of questions were shared by you. So it is not put up on the portal as yet. So I've been following up with the technical team also. But then as yet, it's not visible to me on the portal. So can
I'll
you
check,
please,
but I'll check, but if it is not there, I will put that, because anyways, now I'll be taking another round of that for all these topics that we discussed.
Yes,
So
yes,
maybe
as you
what I'll do,
discussed today.
yes. So I'll check. If it is not there, I'll post it. Fine.
Yes, yes, kindly do so. Okay.
I'll do that.
Thank you, sir.
Thanks for informing.
Excuse me, sir.
Yes.
Sir, in case of any person, the penalty is only up to 25,000 or something else there. As
See,
written, shall be liable to the penalty, which may extend to the 25,000 rupees.
but this is the general penalty under 125. This is not the only penalty. So when this 25,000 penalty, that is general penalty under 125, is applicable, if there is no penalty given above. So we studied all the independent penalties, right? Those
Yes.
are called as specific penalties. Why specific? Because for each type of offense, they have given some penalty. But it is not possible for the lawmaker to write down penalty for everything. So where they have not given any penalty, at that time, the general penalty of 25,000 is applicable.
It means that a general penalty as well as the above mentioned penalty both are applicable.
No,
or only
this is one. Yes. So either it will be the above mentioned penalty, which is called as specific. So if you fall in one of them, specific. If you don't fall in any of them, then general. So it will be one of the two, not both.
Okay, sir. Thank you.
Yes. Yes, students. Anybody else? Any questions? No?
Hello, am I audible?
Shubhankar ji is there?
Yes. Yes, sir. Am I audible,
Yeah.
sir?
You are audible.
Okay.
Shubhankar ji, may
Shubhankar,
I?
sir. Sorry to bother you, sir. Shubhankar, sir, this is Dr. Jyoti. I just need to make an announcement with the students. Students, BOS is there to support you, and we are commencing your open house query session. It will be commencing from the 16th of the June, like 16th of the June, Monday for the paper 1. Then on the 17th June, Tuesday for the paper 2, that is your AFM. For the 18th June, that is a Wednesday, your paper 3, auditing and assurance. Then on the 19th June, your paper 4. Then on the 20th June, this is your paper number 5. So every Monday, you have your open house query session for the paper 1. Every Tuesday, you have the open house query session for paper 2. And every Wednesday, you have the open house query session for your paper 3. Thursday for your paper 4. And Friday for your paper 5. It would be fixed time 4 to 5. You can share any question related to your subject. Like on Monday, you can have any question related to your FR. Faculty would be there to support you, to guide you how to write question, to solve your query, give you tips to clear your examination. So BOS is there to support you. This open house query session is commencing from the 16th of June. The flyer is there on the website. Like you have joined the LVRC for this is September 2025 tab on the BOS portal. In the same way, you can join your open house query session.
Okay.
This is an announcement I need to make. So, Mankar sir, you can carry on.
Okay.
Yeah. Students, I hope you all have made the note of this. This is a very important announcement for the benefit of all. Kindly make a note and please do attend and also inform all
Okay, ma'am. Thank you.
because this will be helpful to everyone.
Okay.
Right.
Thank you. Thank you, Vishal sir. Thank you, Jyoti ma'am, for informing this mentorship session. And thank you so much, Vishal sir. Hope all the students might got the better understanding of all these technical topics related to the liabilities, offenses, penalties, and other relevant topics. For as far as the topic of the penalty is concerned, I know that it is very tricky. So I would request you to make the short notes of all the chapters, especially of where the time limits and the amounts of the penalties are given, and regularly revise the same during the course of your revision, so that it would be you will be able to remember till the date of the examination, and you won't be confused in the exams. So with all these things, I would like to conclude and thank you so much for attending the session. Thank you so much. Thank you, sir.
Thank you all. Thank you, Shubhankar ji. Okay. Good night, everyone. Good night, sir. Good night.
Good night, sir.
Thank you so much.
Yes, Ashok ji. Yes, Ashok. Good.